Welcome to Monday's Targets in Focus, where we take a look at the performance of three currency pairs. Right now I'm joined on the line by Thio, Senior FX and Interest Rate Strategist at BNP Paribas in Singapore. So first of all, let's take a look at the US dollar against the yen. On Friday, following the fall in the US unemployment rate, which broke market expectations, the US dollar strengthened 0.15% against the yen, closing at 78.64. Now, how do you expect this pair to trade this week, and what will be the major economic or socio-political factors to watch out for?
Well, dollar yen has been on a slight uptick, and that coincided with improvement of risk appetite, where it tends to lead to the market searching for carry plays. So I think the yen was seen to be a target, obviously because of its cheap funding. But having said that, I think by itself it's not a sufficient condition for the yen to stay on a sustainably weaker path, because generally there is still a sense of risk aversion from Japanese investors as they see the external uncertainties overseas. So with that, dollar yen still has not broken up above this 79.80 level, and without having broken above this key levels, the dollar yen is really in a broad trading range of between 77 to about 79. So I think that the near-term trend is going to be fairly mixed, with dollar yen will continue to trade within a range.
And how is the US dollar against the Hong Kong dollar been performing, and what is your short, mid and long-term outlook for this pair?
Well, the Hong Kong dollar has fared very well. It really has been staying at the bottom end of its range against its peg against the dollar at 77.75. And the reason for that, I think, is the generally soft US dollar against Asian currencies, including against the Hong Kong dollar. So I think, trading this currency pair is not going to be very exciting because of the peg which Hong Kong dollar has with the US dollar. So I would think that it could stay within the lower end of its band, close to 7.75. But obviously the HKD will stand ready to support this 7.75 level. So generally, I think Hong Kong dollar will stay strong and hover just above the 7.75 level.
And finally, let's have a look at the US dollar against the Singapore dollar. What are you expecting for this pair, and do you have any tips for traders?
The key thing to look out for the Sing dollar, it will be the MAS policy meeting this coming Friday, where it will set the Sing dollar near policy, or the Sing dollar near weighted basket for the Sing dollar, and whether it does want to allow a less strong appreciation of the Sing dollar. Our bets are that they will, because the Singapore economy is slowing and inflation is cooling as well, which is the key benchmark for the MAS. So if they do shift towards a less rapid pace of Sing dollar appreciation, then the Sing dollar could lag behind some of its regional currency peers. So we do like to sell the Sing dollar and buy currencies in the basket, which includes the euro, the ringgit, as well as the US dollar. Near term, I think 122 is quite well supported. I do think that if the MAS shifts towards a less strong bias for the Sing dollar, then it could head up towards the 124 area. So near term, I would see 124 as a near term target.
Thank you very much for sharing your forecast with us today. My colleague Rowena Harris-Dowdy will be looking at G10 currencies for Wednesday's Targets in Focus, so make sure you tune in for that. Goodbye.